Okay, hey guys, so in today's video I want to switch things up a bit. In last video we talked about the top retail stocks to buy in 2020. In today's video I want to talk about real estate investment trusts. So what exactly are real estate investment trusts? Real estate investment trusts are basically equity investments in commercial and residential real estate projects in America and all over the world. So you'll see them in lots of different sectors and industries. There's healthcare REITs, like senior housing, things like that. There's commercial REITs. So for example, one of the most popular is Realty Income. They basically own the land that you see a lot of Walmarts being operated on. They have real estate investment trusts as BDCs, that's like business development companies. We're specializing on debt investments. So there's lots of different ways to invest in real estate. And one of the reasons why I like REITs so much is because, shockingly enough, REITs have outperformed all other asset classes over the long term. So just looking at this chart from JP Morgan and Dalbert Inc. from 1996 to 2015, REITs performed at about 10.9%, while the average investor was about 2.1%. So REITs outperformed the S&P 500, gold, bonds, oil, everything else. So why is this? Why is the return for REITs so high and the return for the average investor so low? Well, one of the reasons why the return for REITs is so much higher is because it's kind of like the tortoise versus the hare, right? The hare ran out so fast, but then it got tired, and then, he went to sleep, while the tortoise was just step by step going slowly. And that's what real estate is. They're not making any more land. There's a fixed amount of it, and it grows slower, but there's more consistent growth. Real estate investment trusts usually don't deal with a lot of the problems that you'll see in the public equity markets. So I think having a proportion of your portfolio in REITs is important for diversification. And let's say some people out there, you're so risk averse, you're not interested in stocks, and maybe you're just currently holding bonds, or you're nearing retirement and you're looking for a way to still earn a return on your money. Maybe, let's say you're sitting on a good chunk of change, but you don't want to risk it buying stocks. REITs is a good alternative to you. So what I wanted to do is I wanted to introduce you guys to a very interesting company. I personally know the CEO of this company. Allows you to invest in private equity REITs that are not available to the public, so it's not like buying a stock over a stock exchange or something like that, and you can earn an awesome return. So this service is called Fundrise. So I just want to quickly go over it. Finally, a real alternative to investing in the stock market. So what Fundrise lets you do is it lets you invest in private real estate, the piece of your portfolio you didn't know what was missing. So traditionally, portfolios are basically built up of stocks and bonds. And as you get closer and closer to your retirement, you want to obviously adjust and be more weighted to bonds and less to stocks. You want to reduce the volatility and risk in your portfolio. But what Fundrise suggests is that you invest around 30% of your assets in private market real estate. Now, normally, you had to be basically rich to invest in private real estate. You had to have access to capital. You had to be backed by investors that could fund the money for the projects. Then you had to spend time developing those projects. That's kind of like what we're seeing now. You see so much of the reality TV where it's like flip it or fix it and stuff like that. It takes a lot of money and a lot of time to make a profit doing it privately. And that's probably one of the reasons why so many people are attracted to stocks. And I love stocks as well. But this is a way to basically have other people raise the money and other people do the work fixing up the property, and you just collect a paycheck. So for years, individuals have been limited to investing in public stocks and bonds. For the first time ever, you can invest like $1 billion institution by diversifying to private market real estate investments. So basically what they do is you basically put your money with Fundrise. They invest it in a group of REIT projects all over America. They manage them. They determine whether it's the right time to develop it, to exit it. If it's making a lot of money, they'll hold on to it, continue to collect those paychecks from the tenants. And if they feel like it's a good time to exit, they'll sell off the property for you and return the money to your account. So basically, as they say, institutional investors have consistently outperformed public markets over the last 20 years by investing in alternative assets like private market real estate. These are basically the investments that were only available to the rich elite, the millionaires and the billionaires of the world, and now it's open to basically anybody as long as you have at least $500. So here's another interesting thing that I saw on their site. It says, looking for better returns and stop paying for something you don't use. It basically talks about how by just being involved in public stocks, you're actually earning a lower return over the long run. So it says public markets is daily liquidity. You invest in the stock market, you or your investment advisor buys shares in an auction environment, prices are heavily bid up, and your trailing 20-year return is 8%. But with the private investments, your private real estate is purchased through a negotiated sale to keep prices low. Of course, the investment horizon is much longer and the return is higher. So I thought that was a very interesting point, and that's why I think it's important to be diversified, because if you guys remember, I want to quickly click back to the chart. The average investor return was only 2.1%, and that's exactly what they're talking about. The reason why a lot of people struggle in the public markets is because they're so driven on emotion. When they see the stocks going up, they want to buy, and when they see their stocks going down, they want to sell. But that's pretty much the opposite of what you want to do. You want to sell when your stocks are nearing their high, and you want to buy when your stocks are at a bargain. And that's one of the reasons why the average investor doesn't perform as well, because all of their investment is basically driven on decisions. And to quote Warren Buffett, he said, be greedy when others are fearful, and fearful when others are greedy. So a lot of people, if you're struggling in the stock market, things like that, maybe check out REITs. It could be another way for you to diversify your portfolio and boost your overall return. So very cool company. I know the CEO personally. So let's actually look at the background of the company. So basically talks about how they got started. I actually know the CEO. I grew up with his younger brother. They launched in 2012, a completely revolutionary idea to take basically commercial and residential real estate that was only available to the rich bankers and the elite and things like that, crowdsource it, make it available to everybody. So as of today, there are 500,000 members, and they've invested nearly $2 billion in real estate all over the United States. Here's a picture of the team. They're based in Washington, D.C. There's the CEO himself. I knew him. I knew him when I was a kid. We both went to the same high school, although he was in high school and I was in the lower school. But we went to the same school. Really nice guy, Ben Miller, pretty cool guy. Studied at UPenn. Really smart, talented guy. So that's basically Fundrise. As you can see, they're quite a big company. They've only been around for 7 years, and they've got 500,000 users, which I think is phenomenal for a company based out of Washington, D.C. to grow so fast. So what I wanted to show you guys is I wanted to actually take you inside my portfolio so you guys can check out my portfolio and see what's going on. So I opened this account in August 2019. I actually started with a smaller balance because I've been investing in Realty Income. The ticker is O on the New York Stock Exchange. I've been investing in them for a while because they're known as like the monthly dividend company, and they're one of the safest REITs out there, I think, and one of the best. But I wasn't really sure with this idea. I mean, even though I know the CEO, I'm kind of new to private equity investment. So I just started with the starter account, which is only $500. And then after a week, I was like, why not? I might as well just do the core thing. So I upgraded to the core account, and I have an imbalanced investing plan. And as you can see, my net returns to date are 19.7%. It's doing pretty good. I've only received one dividend because I've only been in the platform for 4 months or so. So my dividends have been $17.41, my total appreciation. So dividends are basically a portion of the cash they generate, and they accrue on a daily basis, and they return this cash to you. And then the appreciation, it usually comes from when they sell some of the real estate and they return that based on your type of investment. So far so good. This is completely new to me. I'm so used to checking stock quotes and things like that, monitoring prices. Since this is private, there's not a lot of there's no public daily auction, so it's kind of a set it and forget it type thing. They have a really cool way where you can actually enable to auto invest. So if you wanted to deposit a certain amount of money per month and watch your portfolio slowly grow, that's an alternative. Also, this is good for someone if you're nearing retirement age and you really want to reduce risk. I mean, you want to make a return on your money, but you don't want to risk it. You know, sometimes you have a lot of money and you buy a stock at the wrong time. You could be down 20, 30, 40, 50%. even though the stock might recover, you just might not want to deal with that type of risk. So this is a much more slow and steady approach. So let's just take a look at some of the projects they have going. They have lots of different projects all over the United States. You got things in California, LA of course, Miami. Here's one in Austin, Texas. And what they do is they send you updates. It's kind of like send you little updates through email all the time. Here's a project, winds down due to permitting delays. They're about to do that one. And what they also do is that they have a mix of commercial and apartments, and they have the projected return here and the type of structure, whether it's equity or debt. Very interested. And so far in my core portfolio, I have 82 projects all over the United States. Very cool way for me to invest in real estate. It is a very interesting way for you as well if you're looking to add something different to your portfolio. So now I want to talk about the fees. Obviously there's going to be fees here, so let's just quickly go over those. So the fees are actually some of the lowest in the industry, and you're only going to pay 0.15% annually. So on a $1,000, if you put $1,000 in your account, your fees are about $1.50. So very, very low fees, even cheaper than most index funds. So for people that are looking for the cheapest fees you can find, very, very cheap. And then here go into upfront costs and things like that. Of course, very cheap alternative. And they say it would take approximately 40 years of index investing equal to savings you get up front with Fundrise. So one of the nice things about Fundrise is that I found it's like one of the cheapest things. There's not a lot of fees and things like that, and you're still investing in real estate, but there's not that liquidity. Because what I've noticed lately is that a lot of the REITs have been they haven't been gaining the same as much as some of the tech stocks. So that's why I think a lot of people are putting the money in things like Apple and Google, because you're making, for instance with Apple, your analyzed return over like the last 10 years is like 30%. So a lot of people are like, oh, would I rather just put it in Apple, or would I deal with REITs? So, but there still is volatility with Apple. Past returns are not guaranteed in the future. What I like about Fundrise is a nice long-term option, and you can watch your money slowly grow. And for a lot of people that are kind of think that the markets might be at an all-time high and they're wondering if there's going to be a correction, you could possibly put some money in Fundrise. It's kind of a nice way to store your money if you think stock prices are too high. We've been in a bull market now for 10 years, minus the mini correction we had in December 2018. Maybe there's a pullback, who knows. But this could be an alternative, or you could add this to your portfolio as well. So that's everything about Fundrise. I'm going to be making videos regular basis as I update and add to my portfolio. I really like it. It's kind of nice sometimes to not check stock prices all the time. It's a really passive way to invest. So if you guys are interested in checking this out, just you can simply there's a referral link in the video description box below. If you click that link, I get credit for your sign up. It's a way, you guys, if you like my content, it's a way of saying thanks and stuff like that. And a really cool thing is, if you guys sign up, I do get some of my referral fees waived. So for every person that signs up, I get 90 days of free advisory fees. So if you and they do the same for you as well. So if you sign up and you refer just 4 people to the platform, you don't have to pay any advisory fees for an entire year, which it's only $1.50 for every $1,000. But if you put $100,000 into your Fundrise account, then you're saving $150 a year. So hey, better to save something than nothing. So that's it for now, guys. Let me know if you have any more questions, and I hope you guys like the change in the content on the weekends. I like to switch things up a bit, and not just talk about stocks, some other investments that I'm looking into. So let me know what you think about Fundrise. Hope you guys enjoyed the video. Please give me a thumbs up. I really do appreciate it. And leave me a comment. Leave me a comment if you want to hear more about real estate investment trusts in the future. If you want me to talk more about Fundrise, or you want to hear more about stocks or precious metals or anything else, I'm open to your suggestions, and I make these videos for you guys. I really appreciate you watching and all the people that subscribe to my channel. So thank you so much, and take care.